one of Mitish's call in the morning. That stock is up 13%. But Cummins had a good quarter and the market reacted positively. Strong revenue traction. Margins too have come in above estimates. The only question mark now remains on exports, though that has also bounced back this quarter. Rajiv Batra, CFO of Cummins, now joins us. Mr. Batra, good morning. So first, a word on exports, because we have seen a bit of a bounce after many quarters. But is this sustainable going from here? Because that really would be the key.
Good morning. Yes. Exports is something which after several quarters has shown some traction. But it's still too early to claim victory. There's a lot of trends overseas which we need to understand, and several worldwide developments which are taking place at this moment in time, and how the effect and impact will play out. That's very difficult to estimate. You know, our exports, the low horsepower exports, are out to the Middle East and Africa. So Africa coming back with the oil prices going up, you know, what traction that gives us for the medium to long term, again, is something which we need to evaluate more carefully.
Okay.
And then the Middle East, again, we believe may not over the medium term will come back, but short term there may be still concerned.
So what are we looking at for FY18 itself, Mr. Batra, by way of an export guidance?
We are looking at flat exports. Our earlier guidance was 0 to -5.
Okay.
Which we are saying maybe 0 to +2, but somewhere in the same range. Up until we understand these developments and let them play out, we are confident of what we are guiding to the public.
Okay. Your sales are at record highs, and in Concor you highlighted that it was because of government demand. So for domestic part of your business, what kind of visibility do you have?
Well, domestic is something where we are at our guidance. And for the fiscal, as we close the fiscal, we said we'd be about between 10 and 12%. And we've exactly come in at about 11%. But within this, there are very strong puts and takes. Our industrial businesses, which are highly impacted with the infrastructure spend and positively, they are showing very good traction. For the 9 months, they've grown 27%. And for the quarter, 22% growth. So those businesses, which is really the railway business, the marine business, and two of our sectors, which is again road construction and compressors, showing very high traction at this moment in time, which we expect should sustain. Maybe not at the same growth rates, but they will sustain.
Okay. Well, how will margins pan out? You know, your EBITDA margins have improved, but gross margins are declining. As well, you know, with raw material prices inching up, players like Caterpillar, we understand, are actually indigenizing a lot. How will all this play out for you?
Well, you know, we are actually an Indian company, and we've been here for manufacturing in India for the last 40 years. So there's a lot of emphasis that we have on indigenization. And most of our mainline products are made in country. In fact, all of them are made in country with very high levels of indigenization. So value engineering has been something which has sustained us over the past few years.
No, Mr. Batra, what I'm asking is that will that mean competition and therefore, you know, margin impact for you? Basically, how are you looking at margins this year, EBITDA and gross?
Well, competition, price aggression, that's the world today. We meet competition across the world, so we welcome healthy competition. The market over the last 2 to 3 years has become more price sensitive / aggressive. We've had to make changes in our pricing strategy corresponding to those trends. So market watching and not isolating ourselves has been the way we do business as we provide value to our customers. So this quarter margins have gone up by about 1% in material, which has gone straight to the bottom line. So we expect margins will play around up or down 1% in this vicinity.
Okay. You know, there is always a lurking fear in the minds of analysts that Cummins Inc. will outsource the high horsepower range to actually its 100% subsidiary. Can you comment on that fear?
Well, I think manufacturing of products is delineated. What this subsidiary has will retain, and that's the assurance we keep giving our investors. And either way, there's going to be no impact to this P&L. This is the domestic-facing company.
Okay.
Yep.
All right. We'll leave it at that. I hope investors feel reassured. The numbers are extremely impressive.